the best conference in the world. The energy is fantastic. I think we have something like 15,000 people here in Dubai. This is definitely the center of the digital asset world. And we're talking right now on this stage about perhaps the single most important topic, regulation. Now, I'd say in many industries, regulation is a bit boring, a bit staid. But in the digital asset industry, it is what has allowed the industry to rapidly mature. Joining me are three of the world experts here from different regions. And I kind of want to put this in a little bit of context. I'm an American, you might hear that in my accent, but in the United States, in just the last few months, we've seen rapid change. In fact, Donald Trump was elected by saying he's going to change the regulatory atmosphere when it comes to digital assets. And it's had a huge market impact. Even when he was elected, we saw Bitcoin price, for example, go up. And since then, we've seen a lot of activity. We're going to be unpacking kind of Trump's first 100 days in office for quite some time. And Teresa is going to be able to speak to a lot of that. But something's very important to note. We're here in Dubai, all of us, because Dubai has done a very good job of progressively leaning into the digital asset industry without revoking investor protection. So honestly, Matt, I've got to ask you, how are you balancing trying to promote an industry, which I think you effectively are, we're here at TOKEN2049 Dubai, with ensuring that there are rules and those rules are thoughtful?
Okay, big question. So first of all, look, I just want to welcome everybody to Dubai on behalf of VARA. I think it's great that everybody's come. The energy here is fantastic, and also to welcome my co-panelists and moderator as well. Thanks for inviting me to the panel. I think it's worth, just as I answer your question, framing VARA slightly in terms of why it was set up and how we look at the problem. So we're really just a small part in a much broader vision within Dubai, which is our D33 economic vision. The aim of that is to double Dubai's economy by 2033. It's a simple vision. Part of how Dubai is going to execute on that is with new economies, and one of those new economies is virtual assets. So the leadership realized that when they looked at the sector when we first started to do this, that the one thing that most entities in this space were really crying out for was certainty and clarity around what they could do, what they couldn't do, and how they were going to be regulated. And so VARA was really set up as a catalyst for that. We were put in place to make sure that those rules exist, and that we sort of champion investment for.
But you have
Dubai.
certain authorities, for example. You don't regulate stable coins. That's done out of a different department. But you do have some pretty broad authority.
That's right. So we have our remit is any entity in and from the Emirate of Dubai for all virtual asset activities, and that covers the entire spectrum that you can think of. So exchanges, broker-dealers, asset managers, custodians, token issuance, transfer and settlements. We've got a whole range of this.
And when we say token issuers, we mean every type of token issuer, correct? Like everything from what might be securities tokens to perhaps what are considered utility tokens in many markets.
Correct. Yeah, that's right. We chose, and that's one of the fundamental principles that we chose to regulate by, which was to be product and technology agnostic. Our feeling at the time was we don't want to be bogged down by is something an NFT, is something a utility token. We want to focus on the kind of pure risks of any given product and regulate on that basis. Otherwise, we felt we would just be chasing our tails, trying to keep up with technology and evolution, which probably wasn't going to be productive.
And Eric, you've been a regulator for a while, but today, I believe, is your birthday.
It's my birthday.
It's
as a regulator.
You've been exactly 1 year as executive director
1 year old. Yeah.
at SFC.
Exactly.
What have you learned in the last year? What's new for you in digital assets?
Well, definitely crypto is something new to me.
Yeah.
And it was not in my job description. I'm actually the executive director looking after supposedly the licensing and supervisory of financial intermediaries. And I thought that's kind of in my dictionaries include like investment bank, broker dealers, asset manager, etc. But crypto firms, I don't see that actually in my dictionary. But then now, actually, in my first year, I found that basically I have a day job and a night job.
Okay.
The day job is basically doing traditional finance. In fact, I was just having my day job in Switzerland yesterday, and then I just hop up a plane.
So
now,
TradFi in Switzerland,
exactly, and then now
crypto in Dubai.
in Dubai now, half wake up, but now I'm in my night job.
Well, I've got to say, you are dressed very crypto today. I think the audience would agree. So you're pulling it off 1 year in.
Right? Yes. Yeah.
So are there unique challenges to working with virtual assets that you found?
Well, I think there's just so much to learn. I think I agree with what Matthew said. I think a lot of things have changed and also evolving. It's very important for me, I actually come from the market side, so from the traditional finance, but then I think it's understanding the market, I think is the biggest challenge for a regulator, because we can actually come up with a lot of regulatory concept. But at the end of the day, I mean, I'm actually thinking about how there are a lot of similarities between traditional finance and crypto as a trading asset. But that's actually one thing. In fact, in the Switzerland roundtable yesterday I mentioned, there's one big thing that is very different. It's about the primary market. Primary market meaning the issuance is actually unlike traditional finance where you have a listed company regulated by exchange or listing authority. It basically there is some kind of governance around the issuance of it.
Of course,
That
everything
there's no
including
kind of-
disclosures, for example, how underwriting is conducted, for example.
Yeah, that's actually really out there, the crypto community through the blockchain kind of co-regulate that instead of having one single authority. That's actually very different. And that actually, well, I mean, we can learn a lot of things from the traditional finance, but also we need to embrace the fundamental difference of crypto as a trading asset. Yeah.
Well, you seem to have learned quite a lot in 1 year. But I have to ask both of you as regulators, are all of your colleagues as clued into this industry? Because look, it's a big wide world out there. There's at least 193 countries or so around the world, and even more different regulatory jurisdictions. That's a lot of places where someone could conceivably make a mistake in creating the rule set that our industry needs to survive within. What's the education look like for regulators all over the world? Without naming names, I'm not asking you to go and tell all the stories.
Yeah, look, I think it's fair to say that across the world, regulators are at very different stages of maturity when it comes to both understanding and regulating virtual assets. What's clear is that most, if not all, are now very certain that they need to do it, and they need to understand how to do it. But naturally, that evolution, that maturity of being educated and figuring out what the rules need to be is going to be very, very different across different jurisdictions. So yeah.
Teresa, you're in private practice, but you're a former SEC regulator. As an attorney, do you have these kinds of, I'm going to call it backroom dialogues or roundtable dialogues with regulators to help get them up to speed?
Yes, we do. And with all different regulators and even different divisions within the regulator, it's very difficult because the taxonomy is so different. And so everybody is still using different words for the same things. And it's even difficult to have a conversation. And the same thing is happening.
Sorry, I just want to make sure the audience understands. So, I mean, that is to say, people are using different words to describe, when you say the same things, do you mean like virtual asset versus digital asset?
Yes, it
token versus coin.
Yeah, as fundamental as that. And so, like some people are still very much into the original, issuance as a coin and then as a token after that. And then it's more relaxed in other places and everything is a token. And then what comes into a digital asset? Because digital assets are actually really broad, and then not all tokens are cryptographic, although most are. Very few are not cryptographic. Not everything is a blockchain. You have Hedera. And so it's, it's digital ledger technology. So just even the words that people are using. And then as we're trying, so as we've been communicating, like trying to get, ATSs through, for example, years ago, it was so difficult to just even explain and get on the same page. And it was like Groundhog Day every meeting, right? But we've moved forward a lot with that. But there's still, you can see, I was on the SEC's inaugural roundtable of trying to define a security. And
This was here this year.
just this year, yeah. And there were, experts on there. There were, I think, 10 of us, 10 or 11 of us. And we were also using different words, practitioners. I've been in this space for over 10 years, and we've been, we were using different words in trying to come up with what is that line between a security and a non-security.
So I'll say this. On behalf of all the clients I've worked with through the many years, I've now been in business for 10 years at Wachsman, one of the things I hear most is we need regulatory clarity. I'm sure many of you have heard it too. It's a bit of a meme in the crypto industry. We need regulatory clarity. But it seems to me like we legitimately do. We don't even know which words to use. But you've yet created a regime that seems to work. How is that possible? Did you come up with some did you steal frameworks from someone else and put them together? How did you put together this, I would call it progressive, thoughtful framework so quickly?
So first of all, this is why we chose to be activity-based. Almost,
Activity-based.
Taking the terminology out of the equation and saying, look, let's stick with terminology that is common and people understand. So, are you an exchange? Are you a broker? Are you an asset manager? Are you a custodian? So our regulation is fundamentally based on those concepts, not whether is this an NFT, is this a utility token, is this a meme coin, is this a soul-bound token, or whatever.
He knows his stuff. I'm impressed.
Various pieces that come out. So that was the first thing. The second thing, in terms of your question, is absolutely. When we built the regulations, we took inspiration from lots of different existing traditional finance jurisdictions, including the US, including Hong Kong, including Switzerland, all of the major jurisdictions that we thought were a high bar of traditional finance regulation, because let's face it, a lot of the concepts that we're talking about in virtual assets are the same. That's why we hired people from the traditional finance industry to support what it is that we do. So that's how we went about building it. We used what we could from those global jurisdictions, and then we sort of put a flavor of where it was required from a virtual asset standpoint. So, for example, the travel rule would be a good example of that.
Yeah.
So you have a pretty standard AML rulebook that would be consistent with pretty much any jurisdiction in the world, and then you've got the travel rule. So we would bolt on components that would be very, very specific to the virtual asset space in order to just give it that tailored that tailored capability for the entities and some familiarity with the people coming in.
Eric, how is SFC approaching this?
Well, I think we actually come a long way since 2018. We are a bit different from FARA in the sense that, you got the benefit of starting from a clean sheet of paper. So we are actually a regulator for 35 years. So I think we actually started with...
Oh, and I should mention one thing.
Yes.
In addition, I've learned that SFC has been working on crypto rules since 2015.
2018.
2018.
That's kind of a 1.0, and basically, I think what I think Matthew used the term, which we use a lot, activity-based. So we kind of use our dictionary to kind of see how it fit in the crypto arena. So we kind of regulate from AML perspective. We actually regulate from a trading perspective, etc., etc. That's 1.0. Now, fast forward to this year. In fact, I think when we were in Hong Kong in February, right on the stage, we actually announced our 2.0. So we actually have that's kind of my own learning together with my colleagues, in the sense that we kind of see where we are, and then we draw a roadmap. We call it Aspire, just to be a little bit fancy, basically cover 5 elements, 6 letters, 5 elements. Market access, A, and then there's asset safety, where P is product, I is infrastructure, and then RE, because there's no 5-letter word that can fit well. So RE is relationship. So part of it here is relationship. So we actually outlined 12 initiatives and learning a lot from our own kind of experience and also from the market as to how we actually want to go forward. That will actually give it's very well received in the sense that the market get clarity, not on the very prescriptive rules, but about the direction.
Yeah.
I think it's very important to get the direction right about kind of how we actually interact with global order book, how to actually offer more product, how we actually build infrastructure, how do we actually build relationships, etc. So those are kind of giving the direction. And then we try to kind of march forward based on that 2.0. And maybe one day we have 3.0. But now we actually focus on doing the 2.0 first.
I would like to say that even understanding clarity of direction is helpful. Just think about it from a founder's perspective. I might have to spend millions or even billions of my own and investor money to build a company. It's a complicated thing. It's going to be rife with competition. To do that without the certainty of a rule set, or at the very least a direction, is nearly impossible.
Yeah, and I think maybe I just add one point, because one of the thinking about why we do this at the end is that first, we cannot avoid this. I mean, this is something that as regulator, I think we owe it to the market, we owe it to the investors that it is there. We can't just say this is none of my business. So we have to find a way to capture that. This is one thing. The second is that, I mean, I always struggle with this kind of concept, is that we can have the state-of-the-art regulations. We can kind of bring in kind of the top-notch kind of rules and regulations there. But if there's no liquidity, I think this is a waste of time. So that's why I think that need to be, I think as your first question kind of hinted, there need to be a balance. And I think both sides, actually come with both sides, in the sense that, yes, the regulator need to have some humility in understanding the market, but also I reach out to the practitioners, is that you also need to learn our dictionaries, because there's one thing I do believe, there's some merit for traditional finance, and then we actually can learn from each other through this process.
So business and industry can learn from regulators and vice versa.
Yes.
Let's talk about the third group here that I think that all of you have, to a certain extent, I would say, some responsibility to. Investors, traditional investors, the retail investors sometimes they're institutional, and we see a lot of that retail activity in the digital asset virtual asset space. This is a community, I've got to be honest, that has been burned before. We've certainly seen some tragedies in the virtual asset space in the last 5-10 years, and to a certain extent, regular people, the media, have called upon regulators to put rules in place to protect everyday folks. How are you thinking about it from that perspective? And Teresa, I know this is something that the new SEC, the new CFTC, the OCC, and all the other regulators in the US are reconsidering today.
Yeah, exactly. And it's really molded a lot by President Trump immediate action in this area, his immediate day one executive orders saying this is a national priority. You know, digital assets is a national priority, and this is important for our leadership in the international market. And he called for all of the heads of all the the relevant regulators to come together and work together comprehensively, not to do, some elaborate plan over the next 3 years or 2 years, but within 6 months come together and talk and have their own roundtables. And they're really doing that, and they are trying to focus on all the different parts of facilitating capital formation, for example, promoting innovation and protecting investors. That's one part of it, and it's an equal and important part of it, but not all of it. And then oftentimes, that depends, the level of investor protection depends on the type of asset that you're talking about. And so the United States is approaching this and at warp speed to classify assets based on more of a functionality. And so
kind of like what we were discussing here, activity-based to a certain
right.
extent.
And so, like a security would go under the SEC, commodities under the CFTC, and derivatives and futures. And then for those that aren't anything, we still have like the Federal Trade Commission that does false advertising and things. And so it depends on the functionality of the asset, and that determines what kind of investor protection, the level of investor protection. And so when you look at the securities laws, put it in context. These were based on the 29 crash of in the United States, the stock market crash that caused tons of people to go homeless, lose their jobs, banks closed, they lost their savings. Horrible time, right? And so those are the protections that were put in place for that. And so looking at what are the rights and obligations of the people, what are the risks, for a security when you entrust your money to somebody else, and you're relying on them to do something, and you don't have any kind of control in that, and you expect a return. There's certain obligations that come from that, as opposed to buying wheat and eating it, or selling it on the market. So there's different types of risks for investors, and then these different regimes are set up that way to address those risks and also facilitate those markets and efficient markets.
Well, especially in a space as unique as digital assets. You're mentioning everything from soul-bound tokens that might be less transferable, let's put it that way. But one of the issues, I could say it out loud, with digital assets is things like Bitcoin are kind of digital bearer bonds. They can't be retracted so easily, even if, yes, they're eminently traceable on a blockchain. So how are you thinking through this when it comes to investor protection? Because I know that, of course, the AML regime, that's something that I know both of your jurisdictions have thought through quite heavily. But how are you looking at investor protection for a space this unique?
Yeah, okay. So look, I think it's obviously this is something that we take very, very seriously. I'd say two things. Number one, our rules are clear. It's clear what entities can and can't do in our market, and it's clear what they can and can't say in our marketing regulations. To make
Yes,
sure.
this is interesting. You have probably, at least from what I've seen, the most comprehensive marketing regulations, and indeed every exhibitor here is supposed to, and I hope they are.
They are. Yeah.
Yes, indeed.
I'm watching. It's clear in our regs what entities can and can't do, and it's clear in our marketing regs what they can and can't say.
Yeah.
And simply put, now we need to enforce against that, and we are. At VARA,
You heard it here, folks.
at VARA, we have a continuous, strict supervision and enforcement program that identifies unlicensed activity or breaches in our regulations and takes action against those entities. And you'll see on our website, we publish this on our website. We publish the entities that we've enforced against, and we will continue to do so until such time that the problem is tackled.
That nobody is violating these rules at all.
Hopefully. There is one more aspect, though, which is really, really important. So that's kind of the enforcement piece, but the other piece is education. And it's something that I talk about quite a lot. I think there's only so far that you can go with an enforcement program like that. You have to also couple it with clear awareness and education for the market about what the risks are, how they should use the technology, what they can and can't do, and that is also something that we're very, very keen on. We're working with the entities in the market to create those education programs for.
And some sort of consistency between even the delivery, right, of such educational materials.
Absolutely, yeah.
How's Hong Kong looking at this?
I think, Dave, you just stole my word, because I actually want to make 3 points about the investor protection.
Okay.
The first point is about consistency.
Yeah.
I mean, I agree with what Teresa said, in the sense that I think there is a reason why certain measures are there out to protect the investors. They come from maybe 50, 60, 70 years ago. And it is very difficult to argue for a regulatory regime where actually, well, for crypto, we actually doesn't do that, but then for traditional finance, other kind of investment product, we do that. So consistency, we do not need to reinvent the wheels. I mean, we have to stick with that principle that actually we protect investors the same way, irrespective of what kind of products you're selling, as long as you are kind of owing a duty to the investors. This is the first point. Now, the second point is that there's also an opportunity, which is because of the crypto market, the blockchain nature of the market, in the sense that there are new technology we can use to actually make the investor protection more effective. I mean, in the old ways, I think maybe a lot of paper-based or kind of disclosure-based or a lot of kind of report-based regime, so that we can kind of look at the market, how actually investors are being protected or hurt. But now I think with the blockchain, with everything being digital, I mean, you actually have a better footprint. You have actually a better way of analyzing the dynamics of the market. And that is something as regulator we need to pay attention and also upskill ourselves into user. I mean,
Because
when
the
I was
tools
in
are
Switzerland,
extraordinary, right? I mean,
yes,
these
yeah,
the chain
exactly.
analysis and such, elliptic, all these
Pacing tools,
extraordinary
everything.
tools.
I mean, when I was in Switzerland, talking about traditional finance, half the day was talking about use of technology. I think we are actually will be amazed by the amount of tools we can use now to make the market better. And the third point is about collaboration. I think the reason
Yeah, what do you mean by collaboration?
well, because of like the crypto asset trading is global in nature. We always talk about global trading pool. I mean, we actually as regulators need to kind of work together to avoid, again, a very buzzword that we use is avoid regulatory arbitrage. I mean, it is,
Regulatory arbitrage.
yes, we should not allow for.
So please define the term for the audience
Well,
here.
basically, if actually we have a loser regime, while actually Matthew has a kind of tighter regime, then everything kind of moved to Hong Kong. That is not what we want from the market, because at the end of the day, it's very global. And even the investor, for example, in Hong Kong, they can actually buy things out there in the cloud. I mean, God knows where actually where it resides. If we actually allow this cross-border nature to go out of whack, just go to kind of the regime with lesser kind of requirement, I think at the end of the day, it's not our self-interest. I think it's not good for the investor. So at the end of the day, I think we need to have also some kind of denominators, common denominator among the major regulators to make it more consistent so that we avoid this regulatory arbitrage. Yeah.
Can I just add, because I think that's so important with the collaboration, not only like with global, I mean, this industry is global and so many industries are global now, but it's the collaboration with the regulators in the industry to really understand how that's working and collaboration among each other. And that's something now that is finally happening in the United States with all, the industry is being invited and they want to come in, and talking to them is making this a lot smarter regulation. And then something else I wanted to note too that you said about bringing the technology in, because that is so important that the regulators have that technology. And this is something that there's so many things that President Trump is doing, and I don't think people really understand how comprehensive it is. But he's affecting the Federal Acquisition Act and how you can basically get the contracts to get the technology in. Right now, the process, people don't know this, is so onerous. It takes years.
The procurement process to, like, for example, as a regulator, make use of these new tools that you're discussing.
Yes, it can take years to get that contract, and then by the time you have they build your own in-house product, it's already 5 versions later. Or trying to hire people who can do it, it's hard to get people who will do it for that salary, right? And
this is very underreported.
This is, yes, like this is such a comprehensive approach that's happening so fast in the United States, and people don't really understand just how comprehensive it is bringing that regulation in, and then also the cost cutting and the waste and making it so it's easier to get rid of people in federal jobs that are not performing well, and just having things run more efficiently. But the federal acquisitions is a huge issue, and it is really underreported.
It's fascinating. I do want to talk a little bit about enforcement actions. We've seen the U.S. SEC either drop or suspend many of its original cases. We saw the U.S. Department of Justice has kind of retasked, seemingly, the crypto crimes unit to a certain extent. Why is all this happening right now in the U.S.?
Well, there was this massive attack on the crypto industry, and a lot of
in the former administration.
Right, the former administration under Biden. I mean, the lawsuits that came after all, and it was a lot of crypto, other industries and other people as well, but to basically just try and destroy the industry by enforcement actions. And you would see they would talk about exchanges. The SEC, Gensler would talk about exchanges and then go after them as kind of like the neck, right? And so it was very strategic in a way to try and kill an industry. And the current SEC, before you can have before they can have the clarity of exactly what is security, what is not, the chairman has a lot of discretion, enforcement discretion, and Acting Chair Ueda chose to use his discretion to drop cases and settle cases. And that was so pivotal because all these companies were caught up in these investigations and cases and spending millions and millions of dollars. And once you have an enforcement action by a government regulator, it's like, I always say, it's like having a white suit with a black suit mark, and you can never get it off. And it can affect you being able to get licensed by different regulators in different jurisdictions. It can have such a huge impact. So even in trying to just bring some clarity, bring some order to the markets, they had to simmer down and close some of those enforcement actions. But then we've seen the states now going a little rogue, with Washington State now bringing a case against Coinbase for exactly the same things that the SEC just dropped the case against. And so now we're talking about preemption a little bit, and about how...
Sounds like a complicated topography.
Yeah, well, getting it so basically the federal government can do something to bring order and clarity and preempt the states from being able to do something. And then with the AML laws, we've seen the Department of Justice say that it's not going to be bringing cases using an enforcement discretion against, AML violations for particularly for crypto companies that are not willful. And then the CFTC acting chair Pham, she issued a statement saying the same thing, that they all likewise are not going to. And we know that we've seen tons of these cases in the crypto space over the previous administration. And so we're going to see enforcement discretion not used there, which is really what you need, because you need to really balance innovation and law enforcement.
So let's talk a little bit about that. So in the former administration, what's been popularized is the term choke point 2.0 that was preventing digital asset companies, or even those that touch digital assets, from having bank accounts. Simple as that. And I know in Hong Kong, one of the things that we've heard is that there's been an encouragement to allow companies that are compliant, that are in the digital asset space, to get a bank account. And I know that sounds very simple, but it's pretty fundamental to running a business to have a bank account.
Yeah. It's actually not easy, because I think we do actually encourage the more collaboration between banks and the crypto native. I think it's also a learning process. I think the kind of overhand concern, I think the traditional finance, like the banks have, is on the AML KYC front. So I think that's also, again, a mutual dialogue, where I think the crypto native also have to find a way where that's why they need to learn our language to explain, to articulate as to why actually they're compliant on the AFL, the KYC and AML front. And in fact, by getting a license from a proper regulator, be it SEC, VARA, or Hong Kong, is a good way to start, because that actually gives the traditional finance community an assurance that at least they are being regulated in important areas like AML.
Well, let me ask you this very practically. Do you take meetings with companies? Do you actually open your doors and and talk with them about this so they can learn your lingo and speak your language?
Of course. Actually, that's actually very important of my job and also my colleague job. We have definitely an open door, in the sense that I think very important to have, what I emphasize is direct communication. I mean, in the old days, it's very easy, kind of used to the practice where a regulatee appoint intermediaries, consultant, advisory firms, or whatever, a law firm, to kind of reach out to us. And now, if you have that intermediations, sometimes it lost in translation.
Feels like a game of telephone.
Lawyer, exactly. So I think why actually, because this is not an enforcement meeting. It's nothing that we are going to get to arrest anyone, by having that meeting, right? Having that direct dialogue, I think, is very, very important. It actually help eliminate a lot of loss in translation. And if you actually get through intermediaries, often than not, there are actually translate kind of slightly differently, because they're very used to different languages. Yeah.
Matt, have you found the same thing?
Yeah, I was going to add, this engagement with the industry is one of the sort of founding principles of VARA. So we've spent the last 3 years, doing exactly that, understanding how their businesses work, understanding the specific risks associated with that, and sort of working together on, how a regulator might see risk and understand that. But you mentioned banking specifically, and that is something else that we've worked on in the UAE. We as VARA have spent, I don't know how many hours with local banks to help them understand the specific risks of this industry, how an exchange might deal with KYC, how custody works, to get them familiar with not just the terminology but the processes and how they might need to think about the problem when they're giving bank accounts or providing banking access to these FASTs. And we've now got an ecosystem where I think we've got more than 30 fully licensed entities with client money accounts.
That is remarkable.
With these banks. It's not yet perfect, but it's getting there, and the banks are willing, and our central bank is very, very supportive, and so we're grateful for that relationship as well. What we're also now seeing is the local banks venturing into becoming virtual asset service
For example,
providers.
they might have be custodians, for example.
Yeah, we've got.
And the question is, will they also be issuers?
We've got, that not yet here, but there are at least 2 banks. One is licensed for custody, one is in the process. We have 2 that are offering brokerage services to their retail clients, and so the interest in LFIs is now building. They're starting to understand the risk profile of the industry and become a little bit more warmed up to that. I think it's really, really important. And again, it all comes down to engagement and what you can do in terms of education.
Eric, you mentioned this a little bit, but I do think in the closing minutes, I want to talk a little bit more about global harmonization. What does that mean, and why is it so important?
Well, again, I think in the traditional finance world, we have IOSCO, like a kind of supranational entity which coordinate all the regulators. We don't have that for crypto. And I think it is up to us, in a way, as regulator, to establish that type of communication. And to be honest, like every major regulators I talk to, be it SEC or in London, PRA or FCA, and in FARA here, of course, or with Singapore MAS and Japan JFSA, none of them don't talk about crypto.
No, wait, none of them don't talk about crypto.
Exactly, it's a double negative.
Okay.
But actually, everyone, like 1-2 years ago, maybe this is something that they try to avoid. But now, basically, they reach out to us, we reach out to them to exchange views. Now, this is interesting because there are a lot of bilateral communications. So I talked to Matthew maybe talked to kind of MAS talked to like SEC, and then a lot of this. This is not the most efficient way.
That sounds like the same game of telephone you were complaining about earlier.
Exactly. So, but again, I'm not trying to overthink. It's very difficult now to establish something like kind of supranational organization to coordinate that. Let's start with something kind of just next to me. So, I mean, the reason why I'm in Dubai today is because last time Matthew was in Hong Kong and then he invited me here. As simple as that. If I don't come to Dubai, we won't have this conversation. We don't have the next step. So once I come to Dubai, I actually want to find the next step. So I think Middle East is actually a very good cluster. I mean, you have VARA, you have other regulators here who are actually quite progressive on crypto. And this time, I hope that it gives me insights as to how at least this small community, which we actually learn from each other, we borrow from each other, whether we can establish some commonality. I mean, I cannot tell you where actually we start with this kind of uniformity or commonality of our kind of work, but there must be some.
At least something. And Matt, I know you've taken meetings first all over the world, but also here in the UAE with regulators from different places. Are they learning from either early mistakes and, more importantly, the progress you've already made here at VARA?
Yeah, look, we have always been open to sharing how our journey has played out and the things that we think are really, really important. Engagement with the industry being one of them. I was asked on a panel, I don't know when it was, maybe a couple of months ago, what learnings I would give. That would be the first one, engage with the industry. But what we try and do at VARA is really just open our doors to other regulators, and not just regulators, but maybe even law enforcement bodies from other jurisdictions as well, where we just help them understand what we've been through and the types of risks that exist in the industry. And we spend quite a bit of time doing that, and we're very willing to continue doing that in the coming years in the future.
Well, I do hope the 193 plus jurisdictions in the world are listening to this panel. Perhaps we'll have some more common rules, common definitions, and great progress for the digital asset industry. So panelists, thank you very much for being here. Audience, thank you very much for listening.
Thank you.
Yeah.
Thank you.